Thanks everybody for the likes and comments and shares of the last long-term video that I did last weekend talking about the broader market, and I'll link that in the comments of this video. In this video, we're going to be talking about specific companies and 2-week and monthly charts that are generally tightening ranges. And I love to identify these long-term tightening ranges because when tightening ranges break, they usually see a significant amount of volatility. And the longer that pattern has been building, the more follow through we can anticipate. It's almost like the price, I used to call it the rubber band effect when I started making videos 7 years ago. And it's because I just imagine an equilibrium, a tightening range of higher lows and lower highs, stretching the rubber band, and then it finally snaps and you get the big move up or the big breakdown, depending on the direction that the tightening range breaks. So just a couple quick examples. The dollar on the 6-month time frame was a 6-year-long tightening range right here. And we finally broke bullish, and we had that extremely strong run up on the dollar back in all of 2022 essentially. And you look at the 6-month time frame of the dollar, 2008 to 2013, same thing, just a tightening constricting range, and it finally broke and had very significant follow through. You can also look at gold. I can remember making a video, if you look up TheChartGuys Introduction to Gold and Miners, you will see me talking in that video, again, not knowing, I wasn't saying we're gonna break bull, but I was saying, watch this tightening range. We know it's going to break, and we know there's going to be volatility that comes to the metals and the miners. And we got the bull break to all-time highs with a huge move up. Just recently, we had oil. Oil was in a tightening 2-day range, and it just was constricting, and finally broke. And you can see the very solid follow-through on the break after that took place. So as a trader, one of the things that I'm doing is I'm putting in all these hours on the weekend and pre-market is I'm identifying these patterns, sometimes on the hourly and I'm looking for a day trade. Sometimes it's on the daily and I know to be watching this week or next week. If it's on the weekly, maybe it's this month it plays out. If it's on the monthly, maybe it's this quarter. But I have a list of these setups and I know just keep an eye on these because volatility will hit these names hard when these long-term patterns break. The way that you trade these patterns is if you have high conviction on the direction you think it's going to break, you're positioning while we're tightening up. You're making plays off support if you think we're going to break bull. You're making plays off resistance and top fishing resistance if you think it's going to be a bear break. If you don't have high conviction, and in this market environment, I generally don't have a whole lot of high conviction, you're just waiting for the break and then you can react after the break. And if it's a long enough pattern that took 6, 12 months to shape up, you don't have to, if it's a 5-minute pattern, you got to be right on top of it when it breaks, because if you miss it, you probably missed the ideal entry for the move. But if it's a 6-month, 12-month long pattern, it takes a while to play out. So that gives you time. Looking at cost on the monthly time frame, ever since the all-time high, April 2022, so almost a year in the making now, this is our big move down, lower high, higher low, lower high, higher low, lower high. We're getting extremely tight. Generally, you'll see volume drop off on these patterns as they tighten up, and the break will have a volume spike associated with it. And that's your proven indicator for the volume. If the volume is not spiking on the break, you're a little bit less convinced that the break's going to follow through. If there's a big volume spike on the break, that's what you want to see. So right now, the only levels that I care about on this chart is the double bottom at monthly support of 447, and we got resistance at 530. And what you need to ensure is that when this equilibrium breaks, multiple levels break. So if we break, 530 and then go right into weekly consolidation without breaking 542, I'm just rounding, but that level right behind it, that's a little bit of a red flag. If it's going to be a bull break, we need to take out both of those levels as soon as possible. Because again, we need the market to have conviction that the bull move is taking place. So a monthly higher low is trying to form right now. We can see the daily time frame isn't even an uptrend. There's still work to be done here. And we've got essentially low, top of the bounce, double bottom, and anything under 495 is just a lower high. If this tightening range breaks bull, that will be the first indication that a monthly higher low is being set. So again, if I think that this pattern is going to break bull a few months from now, then I'm looking to enter off of support. And we just dropped down to 465 and we got within how many percent of support? Got fairly close. We dropped down. We got within about 4% of support. So if you don't have a conviction on the direction we're going to break, you are just patiently waiting. You can draw trend lines to help as a visual guide, but I personally prefer price levels as my guide, but to each their own. Maybe you like that visual. Just have to ensure that the price levels break. Maybe the trend line breaking gives you an early indication, but if we break this down trend resistance line but fail 530, we're just remaining in the tightening range. So cost, monthly time frame, trying to set a higher low, and I would say that this pattern is extremely likely to break sometime within the next 3 months. F is a little bit less clear. It's the 2-week time frame, and I'm viewing this as a base of support that's very important. Another thing to be looking at is not only the relevant price action, but zoom out. If 1061 breaks, where's the next level that we're looking at? You can see previous resistance, 1050, 1056, then holding it as support. And if that level fails, I mean, really, I'm looking down at 843 as the next level. So there's space for bear follow through. And the way that I'm viewing this pattern, again, on the 2-week time frame, big bounce, pull back to hold support, lower high, broke support here, but held the lowest level, another lower high, and now back to testing that support. This may be earnings that dictates the break of this pattern, which is always a bummer for me because earnings are a coin flip. I'm not a fundamental investor. And so if that's the case, I just say, meh, too bad, on to the next one. Because if something is going to break on the earnings reaction, maybe I can take a trade after the earnings reaction settles in a little bit. It's just the less ideal scenario. So the question for Ford is, can the bulls hold 1061 and 1090 to keep within this tightening range and see a bounce for a few weeks? Or are we about to break 1090 and 1061 and fall through to an area of a lack of support? One thing is very clear. We could say as long as these lower highs keep forming, the bears have absolute complete control. And we just double topped here by 7 pennies before dropping down significantly, about 30% off that high, and now heading down to test that support. So we're much closer to a bear break than a bull break, and the bulls' backs are against the wall, needing to defend these support levels and running out of time. Baba, I'm watching Baba for the potential of a monthly inverse head and shoulders, where this is the left shoulder, this is the head, and the fact that we bounced over 100%, just about 100%, I would be very surprised if Baba dropped straight to a lower low. So I'm anticipating a monthly higher low is the most likely scenario. Anything above 58. And from where we stand right now, it looks like, we're closing in on support, but we have to keep in mind that we've got 27% of space above that level. So we have to see the bulls confirm a daily uptrend as the first baby step towards a monthly higher low forming. If we're not in a daily uptrend, we're not going to set a monthly higher low. But you can see we're pretty beat up here with the daily RSI. We got the EMA 12 acting as resistance for the last 1.5 months. The weekly chart is a stair step drop, which means a lower high every single candle for the last 7. And I can look at this and say, one strategy would be when this weekly stair step breaks bull, I'm going to make an entry and stick my stop under the low at that point. And my mindset will be that's either the monthly higher low or I'm wrong, and I would want to stop out. And that's, the probability of you stopping out there would be fairly high because there's little indication the monthly higher low is being set on that move taking place. But the reward, I should say the risk, is low because your entry is going to be near that recent low. So that's one thing I'm keeping an eye on. Weekly stair step, scouting a monthly higher low on Baba. NEE, this is a utilities company, gives dividends. So I'm watching this one and viewing this as a low, high, higher low, lower high, higher low. We just held support by 65 cents, less than 1%. So there's your tightening range. The monthly higher low is trying to shape up. Earnings are going to be a factor of this pattern. And again, if you show me this is a daily chart, I say we're probably going to break in a week. But knowing it's a monthly chart, we can easily tighten up within this monthly chart for another 4 months. What if we bounce for 2 months and then pull back for another month? Next thing you know, we're in the second half of the year. So we have to remember to remain patient based on the time frame we're watching here. But daily chart, finding a little temporary bottom, trend change confirming, daily uptrend. We'll eventually need a weekly uptrend to confirm. We've got a resistance test of 76.60 here. If we were to fail that level, it would be an inverse head and shoulders to be watching. Again, we're watching for shorter term time frames, patterns to align with what we think the most likely longer term scenario is. So if I think it's a monthly higher low forming or double bottom, then the weekly has to give me a bullish reversal pattern. So I'm going to be watching for a potential weekly inverse head and shoulders to try and set up the monthly higher low. And then we would be looking for a lower high, anything under 8804. That's a bit of a ways away. We could bounce 20% and still form that lower high. But this is one to be watching. A little bit more developed. So very similar to cost, different time frame, but you can see the monthly higher low on NEE is just slightly more developed than the 2-week higher low on cost. CCJ, uranium. So CCJ monthly is just beautiful. It's just beautiful. Monthly equilibrium playing out for over a year at this point. When this breaks, we're absolutely going to anticipate follow through. The support level I care about is 2094. Anything above that is a monthly higher low. We just set the lower high at 2973. And here on the chart, guys, we have Jungle Funk Joey and Red Devil putting out their weekly uranium videos, and they were well aware of this pattern and keeping an eye out for bearish signs, knowing we were heading to that resistance. It ended up being a head and shoulders. Head and shoulders pattern confirms, again, a shorter term time frame pattern shaped up that aligned with a potential longer term scenario. A monthly lower high was on watch, and a daily head and shoulders confirmed to set the monthly lower high. And now we're just patiently waiting as we are in the middle of this range. We're about $4 above the low, and we are about $5 below the high. So this is another one that could end up taking shape for another 3-4 months before it eventually breaks. Bonus, TAN, the solar sector, just had a tightening weekly equilibrium that just broke bear. So this is one that we can keep an eye on and see just how much follow through do we get? How does this play out from here? Bear break was at 72.12. At this point, we've already got almost 5% of follow through, and we're looking down at the next support level of 62.97. So quick rundown here, but again, some names to put on your watch list. These longer term charts will ideally keep tightening up. When I'm not in a position and I'm watching a chart like this, I want it to get as tight as possible, because again, that's just constricting the rubber band, and it means that pop, when it happens, is going to have more pressure behind it, because you essentially have price discovery and you get to a point where half the market's going to be wrong if you're in this very nice equilibrium. If it breaks bull, you got longs that are going to enter long, you got shorts that are going to have to cover. And if we break bear, you've got longs that are going to stop out and you have shorts that are going to jump in. So you want it to get as tight as possible before that break takes place. Appreciate you watching. Thanks again for the likes and the shares. Again, that dictates the kind of content that I put out. So I saw last week that there were a lot of views and likes and shares of the long-term analysis video that I did. So this weekend, I do another one. Thanks for your support, and we'll see you soon.